China has issued a stern warning: don't side with the United States in its trade war against us. Beijing says any nation joining the US in restricting trade with China will face consequences. As the trade war escalates, global markets are rattled. The US pressures allies to cut economic ties with China, citing unfair trade practices. China sees this as an attempt to contain its rise as a global power. It accuses the US of protectionism and bullying. The world watches nervously as tensions rise between these two giants. The stakes are high, not just for China and the US, but for the global economy. The US strategy towards China is becoming increasingly clear: isolate and contain. Washington sees Beijing's growing economic and military might as a threat to its global dominance. To counter this, the US is employing a multi-pronged approach, with trade being a key weapon. The Trump administration has imposed hefty tariffs on hundreds of billions of dollars worth of Chinese goods, making them more expensive for American consumers. The goal is twofold: to protect American businesses and jobs from what the US sees as unfair Chinese competition, and to pressure Beijing to make concessions on trade. Beyond tariffs, the US is also actively urging its allies to reduce their dependence on China. It wants them to find alternative sources for goods and services, restrict Chinese investments in strategic sectors, and limit the transfer of technology that could bolster China's military capabilities. This strategy, however, is not without its critics. Some argue that it is counterproductive, hurting American businesses and consumers while pushing the world towards a costly trade war. They believe that dialogue and cooperation, rather than confrontation, are the best ways to address concerns about China's trade practices. China is not taking the US offensive lying down. Beijing has responded with retaliatory tariffs of its own, targeting key American exports like soybeans and automobiles. This tit-for-tat tariff war has already impacted businesses and consumers on both sides, raising prices and disrupting supply chains. But China's response goes beyond tariffs. Beijing is actively seeking to reduce its dependence on the US dollar and American technology. It is investing heavily in its own technological innovation, hoping to become self-sufficient in key areas like semiconductors and artificial intelligence. Furthermore, China is strengthening its economic ties with other countries, particularly in Asia, Africa, and Latin America. It is offering loans and investments in infrastructure projects, forging new trade deals, and promoting its own version of globalization, the Belt and Road Initiative. China's message is clear: it will not be bullied. It has the economic might and the political will to withstand US pressure and chart its own course. The trade war, far from forcing China to surrender, may end up strengthening its resolve and accelerating its rise as a global power. The standoff between the US and China is like a high-stakes game of chicken. Both sides are racing toward a collision, each hoping the other will swerve first. Who will blink first? The US believes China, reliant on exports, has more to lose. But China has shown resilience and its economy keeps growing. Its massive domestic market is a trump card, attracting foreign business. Meanwhile, the US feels the pain: higher prices and supply chain woes. The longer this game continues, the greater the risk for both economies and the world. The ongoing trade war between the United States and China is, honestly, a stark reminder of the interconnectedness of the global economy. In today's world, goods, services, and capital flow pretty freely across borders. A disruption in one part of the world can have ripple effects across the globe. The tariffs imposed by both sides are already having a negative impact on businesses and consumers worldwide. Higher prices for imported goods are fueling inflation, eroding purchasing power and, well, slowing down economic growth. Supply chain disruptions are forcing businesses to find alternative suppliers, often at a higher cost. The uncertainty surrounding the trade war is also taking a toll on business confidence and investment. Companies are hesitant to make long-term plans when the rules of the game keep changing. This uncertainty can stifle innovation and job creation, further dampening economic growth. The stakes are particularly high for countries that are heavily reliant on trade with either the United States or China. These countries are caught in the crossfire, facing pressure to choose sides or risk losing access to crucial markets. This pressure can have significant economic and political consequences. The trade war between the US and China is not a contained conflict. It has become a global issue, with ripple effects felt across the world. This economic conflict has collateral damage, impacting economies and livelihoods far beyond the borders of the two main protagonists. Emerging markets and developing countries are particularly vulnerable. Many of these economies rely heavily on exports to the US or China for their economic growth. The trade war's disruption of global trade flows and investment patterns directly impacts their economic stability. Furthermore, the escalating trade tensions fuel uncertainty in the global market. This uncertainty can lead to a decrease in foreign investment, as businesses become hesitant to invest in unpredictable environments. For developing nations reliant on foreign capital for growth, this can be detrimental. The trade war also undermines the rules-based multilateral trading system that has underpinned global prosperity for decades. As the US and China, two of the world's largest economies, engage in protectionist measures, it sets a dangerous precedent for other nations to follow. This could lead to a downward spiral of protectionism, harming global trade and economic growth for everyone. The escalating trade war between the US and China is not just an economic conflict, it is reshaping the geopolitical landscape, accelerating the emergence of distinct economic blocs. As trust erodes between the world's two largest economies, other nations are feeling the pressure to choose sides. The US is actively working to consolidate its economic alliances, particularly with countries that share its concerns about China's growing influence. We are witnessing the strengthening of existing trade agreements and the formation of new ones, often with an underlying objective of reducing dependence on China. China, for its part, is not passively accepting this new world order. It is actively strengthening its economic ties with countries across Asia, Africa, and Latin America through its Belt and Road Initiative. This ambitious infrastructure and investment program aims to create a network of interconnected economies, with China at its center. This fragmentation of the global economy into competing blocs has significant implications for the future of global trade and cooperation. It raises concerns about a world divided along economic and ideological lines, with reduced opportunities for collaboration and increased potential for conflict. The current trade war between the US and China offers a stark reminder of the perils of protectionism. History is replete with examples of how protectionist policies, aimed at shielding domestic industries from foreign competition, have often backfired, leading to economic stagnation and even conflict. The Great Depression of the 1930s is a prime example. The Smoot-Hawley Tariff Act of 1930, which raised tariffs on over 20,000 imported goods, is often cited as a contributing factor to the severity and duration of the economic downturn. The act triggered retaliatory tariffs from other countries, leading to a collapse in global trade and exacerbating the economic crisis. Protectionist measures often create a false sense of security. While they may offer temporary protection to certain industries, they come at a cost. Tariffs raise prices for consumers, reduce choices and stifle innovation. They also invite retaliation from trading partners, leading to trade wars that harm everyone involved. The current trade tensions between the US and China carry echoes of these past mistakes. It is a slippery slope, and the world cannot afford to repeat the mistakes of the past. The trade war between the US and China stands at a crossroads. The path ahead remains uncertain, with two divergent possibilities: continued escalation towards a full-blown trade war, or a return to dialogue and cooperation. The first path, characterized by escalating tariffs, economic decoupling, and deepening mistrust, poses significant risks to the global economy. It could lead to a prolonged period of economic uncertainty, slowing growth, and even recession. It also risks fueling geopolitical tensions and undermining global cooperation on critical issues like climate change and pandemics. The second path, however, offers a glimmer of hope. It requires both sides to recognize that a trade war is a lose-lose proposition, and that cooperation, while challenging, is the only way to achieve a mutually beneficial outcome. It demands a willingness to engage in dialogue, address legitimate concerns, and find common ground. The world is watching anxiously, hoping for a course correction. The stakes are simply too high for the US and China to continue down a path of confrontation and conflict. The future of the global economy, and perhaps the world, hinges on their choices.